How much of your portfolio should be glittering with gold and silver? We're going to explore what to buy, how to do it, and some slick ways to navigate those challenges. Physical gold and silver, gold ETFs, gold stocks. Hey there, welcome to Money Talks US, China, and Beyond. I'm Chris Lee. And boy, do we have something special lined up for you today. We've promised to dive deep into the investment strategies for gold and silver. And that's exactly what we're going to do. But heads up, while we're about to lay out some pretty cool strategy, remember, this isn't advice. You are going to tailor this to your own unique situations, okay? So let's get to it. We're going to talk about numbers. How much of your portfolio should be glittering with gold and silver? We're going to tackle the nitty-gritty challenges you might face when you start investing in those shiny metals. But don't worry, we're not going to just leaving you with problems. We've got solutions too. We're going to explore what to buy, how to do it, and some slick ways to navigate those challenges. So here's our roadmap. So feel free to jump to any sections with the timestamps we show. So buckle up and grab your notepad. All right, let's kick off with the big question. How much of your dough should you pour into gold and silver? Now, this isn't one size fits all. It's gotta vibe with your personal situation. Are you young or nearing retirement? Do you live in a place where economies are stable or volatile? How is your wallet looking, and how savvy are you when it comes to financial markets? Here's my take. If you are more of a passive investor looking to keep things easy and simple, and you live in a nice and stable place, I would say shooting for 5 to 10% in gold and silver might be your sweet spot. Think about it. Even Kevin O'Leary from Shark Tank keeps 5% of his portfolio in gold, split between bullion and ETFs. And then there's Ray Dalio, the hedge fund guru, who echoes this, suggesting 5 to 10% for an all-weather investment approach. But if you're the active type, someone who wanted to dive deep into the market trends and feels confident in your strategy, you may want to up the ante, especially considering today's inflated stock valuations in the US, which we just chatted about. You could think about pushing that to 20 to 30%. It's all about understanding the game and aiming for those higher returns. And remember, this isn't just about numbers. It's about aligning with your life's blueprint. So how much gold and silver should you hold? That's for you to decide, based on what fits your personal journey. Now, diving into gold and silver isn't all sunshine and rainbows. Here come the challenges. First off, as we have quoted the Oracle of Omaha, Warren Buffett, for many times now, these metals aren't like your money-making business or bonds that pay you dividend or interest. And gold and silver just sit there, shiny, beautiful, but non-productive. Then there's the cost of playing in the game. If you go for physical gold, you've got middlemen making their cut. They buy and wholesale, craft it into those shiny bars you've seen in movies, right? And then sell it to you at a retail price. After that, shipping fees, storage costs, and let's not forget the risk of someone else deciding they want your gold more than you do. If ETFs are more of your speed, they come with their own little toll and expense ratio. These fees covers the security of the gold in their vaults and all the nitty-gritty of managing the fund. Now, gold stocks, they're like the roller coaster at the fair, exciting but scary sometimes. When gold prices climb, especially in times like a stagflation, these stocks can double or even triple your money, thanks to leverage. But when gold falls, watch out. These stocks can plummet even harder, and not all mining companies are run like a well-oiled machines. So how do you navigate this maze? My strategy? A blend, everything. Physical gold and silver. There's something reassuring about holding the real deal. But remember, security well. Gold ETFs, great for liquidity and less hassle, but keep an eye on those fees. Select the gold stocks. This includes miners and those cool royalty streaming companies that we're going to talk about in a minute. They can offer high returns, but choose wisely. Look for well-managed companies. So we're going to unpack each option and figure out how to tackle those challenges. Because even in the glittery world of metal investment, knowledge is your best defense against losing your shirt. All right, first, let's chat about the classic move in the gold and silver game, holding the real deal, physical coins or bullion. It's like the OG method of investing in these metals. Sounds simple, right? You just buy from someone trustworthy and keep it in a safe spot. Oh boy, does it get tricky from there. Where do you stash it? How do you keep it from turning into someone else's treasure? Personally, I'm all for having a few gold or coin. I'm all for having a few gold coins or small bars hidden away at home. Think of it like your secret stash alongside some emergency cash. Physical bullion is like your off-the-grid piggy bank, a tangible piece of wealth that doesn't rely on banks or digital systems. We've seen what happens when disaster strikes. Think Greece in 2015, when banks were rationing cash to 60 euros a day, or Puerto Rico in 2017, where after the hurricane, you couldn't even use a credit card because there was no power. Cash was the king, but banks were shut, and ATM were like finding a unicorn. I'm not talking doomsday here, just your typical economic hiccup or natural disaster where having some hard assets can be lifesaver. But let's be real. Once you're dealing with more than just a few shiny pieces, keeping it all at home turns into a highest waiting to happen. For big stashes, you gotta go pro. Think professional offsite storage with all the bells and the whistles for security. This comes with its own price tag though, eating into your return a bit by bit. Sure, historically, gold and silver outpace storage costs, but the journey can be quite a roller coaster. But by the way, digital currency is another option. More and more folks are using them not just as an investment, but as a kind of off-the-grid asset, completely detached from the traditional banking system. I'm going to be honest, I had my doubts at first, but watching this space evolve, this thing, seems to become more and more legit. And we'll dive deeper into this in our next episodes. Because let's face it, the digital money game is changing how we think about value storage outside of the banks and government control. Second, let's dive into the gold and silver market the modern way. Gold and silver ETFs. How we can make the shiny gold and silver not just sitting there, but work for us. Tackling Buffett's point that they don't produce income. This is probably the simplest route for most of us. You just pop into a brokerage account, buy some shares, and bam, you're in the game. The beauty here, liquidity, my friends. You can trade these like hotcakes, making it super easy to tweak your portfolio, jump in and out of the market without breaking a sweat. Now, these ETFs used to be on the pricier side, but they're getting cheaper by the day. Here's the scoop. OG SPDR Gold Trust, GLD, longest in the market, started in 2004, was a bit of a span. Then iShares come along in 2005 with a more budget-friendly option. Fast forward to 2018, the SPDR launched GLDM, which is even lighter on the market. But here's the catch. While ETFs are fantastic for everything investing, they don't quite give you the end-of-world insurance field of holding physical metal. Most aren't redeemable for actual gold or silver. And if civilization hits the fan, you've got nothing tangible to trade. But wait, there's a twist. The Sprout funds and the Perth Mint Gold Fund are different beasts. They keep their metals in physically allocated bullets, which you can actually redeem. If you're looking for something a bit more secure and apocalypse-proof, these are the ones to watch. Now, next we're going to dive into how we can make the shiny gold and silver not just sitting there, but work for us, tackling Buffett's point that they don't produce income. We've got two approaches here. One is simple. The other is a bit like playing chess with your money. For those of you who like to get hands dirty, here's a fun strategy with gold ETFs, especially the liquid ones like GLD and SLV. Here's the deal. Step 1. Instead of buying the ETF outright or directly, you start by selling something called cash secured put options. Pick a price slightly lower than today's market price. If the price stays high and nobody decides to sell at that lower price when the option expires, you keep the cash they paid you for the option. And you can do this over again. If the price goes lower, someone does decide to sell you at those shares. You end up buying all those shares of the ETF. And now gets to step 2. With those shares, you sell covered call options. That means you're selling a price higher than what you paid for the shares, hoping someone will buy them at this higher strike price on expiration of the option. If they don't buy, you keep the cash collected from selling the option and do the option selling over again. If they do, you sell your shares for profit, and then rinse and repeat. Go back to step 1 and 2. It's like a little dance option weaving. You're essentially buying low, selling high, and collecting income from options at every turn. Sounds like you need a PhD in finance, but once you get the hang of it, it's pretty straightforward. For those of you who are up for the challenge, I'm going to do a whole episode on how to master this move. But if all that sounds like too complicated, too much work, or too risky, there is a simple path. Dividend-paying gold stocks. You buy shares in gold companies that actually pay you dividends, and you let your money work while you sleep. So let's chat about those now. And when it comes to gold and silver stocks, we're talking about two main types here. One, miners. Second, royalty streaming companies. So miners, these are the folks with their hands dirty, literally digging gold and silver out of the earth. You've got big miners, small ones, and even ETFs that bundle them all up for you to invest in. The cool thing about miners, they can sidestep some of the headaches of dealing with metal directly, as we said, unlike gold and silver, which just sit there. Miners can generate cash flow and pay out dividends. But here's where it gets wild. Miners are like gold on steroids. If gold doubles in price, a miner stock might jump 3, 4, or 5, 10 times that, thanks to leverage. Picture this. If gold is at $1,100 an ounce and a miner's cost break-even point of mining the gold is $1,000, so they're making $100, right, per ounce. Now, if gold jumps to $1,500, boom, they're making $500 per ounce. That's a 400% profit jump from just a 36% increase in gold price. Pretty cool, huh? It's true. It's the same on the flip side. If gold tanks to 800, all of a sudden they lost $200 per ounce. And if gold price stays low, the miners are going to go into red, deep, bleeding cash. Stock price drop to rock bottom and potentially heading towards bankruptcy faster than you can say gold rush. If you're holding gold, you can chill out through the downturn. But miners, not so much. If gold price stay low for too long, they're toast. Remember, even if demand drops, we only mine about 2% of the world's gold each year. So the market can be irrational longer than a miner can stay afloat. Plus, let's not sugarcoat it. Many gold miners are run like they're playing Monopoly with real money. They often miss the most profitable gold price spike. They can't keep the cost down. They often make bad acquisitions when gold price is high and then fall into the trap when the price snaps back. And their leadership tends to be overpaid with little skin in the game compared to the size of their companies. As a result, the gold mining sector as a whole, it's had some pretty bad, dismal returns compared to the metal they're pulling out of the ground. Most gold mining stocks today are still below what they were back in the 90s. There are a few shining stars out there, but for the most part, it's a minefield of underperformance. Now next, let's switch gears to something with a bit less risk and potentially more shine. The gold and silver royalty streaming companies. If you're looking to get into gold and silver, you really should check them out. Here's the scoop. Instead of getting their hands dirty in the mines, these companies bankroll the mining operations. They gave miners cash up front to get things rolling, and in return, they get to scoop up gold or silver at a sweet discount or take a cut of the mine's output. It's like running a high-class investment portfolio where you're not just betting on one mine, but a whole bunch of them. They keep adding new stream to their portfolios, making new deals as they go. Why do miners love those deals? Because when they take on regular debt, they're on the hook no matter what happens to gold and silver price. But with the streaming royalty deal, their obligations move with the metal prices. So if gold tanks, their debt to the royalty companies goes down too, which is way less risky for them. And for you, the investor, these companies offer a smoother ride, relatively smoother ride compared to the roller coaster of owning mining stocks directly. They're less volatile because they're not as leveraged. And guess what? Historically, they've done better than gold itself. Take a look at Royal Gold, for instance. And they're not even the best of the pack. They've been paying dividends all along, so the total return is even sweeter than what you see on the chart. Now, in this niche, there are really two groups to watch. The big three veterans. These guys have been round the clock with robust portfolios of active streams and royalties. And second group, the rising stars. These are newcomers to the game with a bigger chunk of their portfolio tied up in projects that are still in development. They're riskier, but if their bets pay off, the potential reward could be massive. All right, let's zoom in on two standouts in the gold and silver stock space. One is the big kahuna of royalty streaming companies, and the other is a gold mining champ. First up, Franco-Nevada, FNV. These guys are the royalty streaming kingpins. As we said, they fund the miners and get the cut of the gold. Their business model is like a well-oiled machine. Low risk, diversified, and they bumped up their dividend for 17 years straight. But here's the twist. They've got some big eggs in one basket lately with the Cobra Panama copper mine, which has hit some legal snags recently. But still, FNV isn't just about gold. They've got their fingers in silver, oil, and other commodity goodies too. So they trade at the stock price trade at a premium, but for good reason. Zero debt, loads of cash, and sky-high profit margins. Their stock has been pretty stable, hovering around the same base price we've seen over the last 5 years. So despite the recent hiccups, they are a buy on weakness in my book. And the second, let's talk about Agnico Eagle, a heavyweight in gold mining. They're not the cheapest option out there, but that's because they play it safe, focusing on mining places like North America, Mexico, Australia, and Finland, all relatively stable jurisdictions. Gold miners like Agnico don't command the same high valuations as royalty companies because they carry more operational baggage. If, say, energy prices spike when the gold doesn't, the margin gets squeezed. But they do offer some sweet dividend, nearly 2% yield, which is nice. Their stock has almost doubled in a year, riding the gold wave. So while they're worth watching, I wouldn't rush to buy just yet. All right, so there you have it. We've covered how much of those sparkly assets you might want in your portfolio, explore the different ways to invest, from holding the actual metals to diving into ETFs and buying into mining or royalty companies. Each option comes with its own roller coaster of thrills and challenges, but now you've got some tools to tailor a strategy that's going to match your vibe, right? And that's a wrap on our 3-part gold and silver investment extravaganza. If you missed any of the earlier episodes, go back and give them a watch. You don't want to miss out on the full picture. Thanks for tuning in, and here's to make some smart, shiny investments. If you like what we show here, make sure to subscribe, like, and share, and tell us what you think in a comment. See you soon.